Austin's warehouse vacancy just hit his highest level since 2023. That means if you are a business owner looking for industrial space right now, you have more options, more leverage, more room to negotiate than you have had in the overpast 2 decades. But here is the catch. No every submarket is the same. And if you are in the wrong one, you could still be paying more than you need to. So stick around and I'm going to break it down all for you in the next few minutes. Hi, welcome back. If you are new here, I'm Helen, a commercial real estate broker focused on Austin industrial and warehouse market. I help business owners, investors, landlords to make smart decisions in this market. In this video, I'm walking you through the latest Q1 2026 market data. So what is happening with vacancy, with rents, with supply, with demand, and more importantly, what is all of this means for you as a tenant, as a buyer or investor. So let's get into it. Here is what I have been hearing from a lot of business owners right now. I know the market is changing, but I don't know if I should wait, sign now, or try to renegotiate. And honestly, that confusion is completely understandable because for the past few years, this was a landlord's market. The space was tight, the rents were rising fast. If you needed a warehouse, you signed whatever was in front of you or you lost that space. But that dynamic have shifted completely. And if you are still operating with that old mindset, you are leaving money on the table. The market have changed. So let me show you exactly how. Vacancy. According to CBRE and Partners Real Estate, Austin industrial vacancy rate hits the 15.7% on Q1 of 2026. To put that in a perspective, that is a historic high. The last time vacancy was this elevated was back in 2023. And what that means for you? Well, if you are a tenant or a buyer, you have many options. More available space means more negotiating power. If you are a landlord, you need to compete harder to attract and keep tenants, which means better economics, not just a nicer flyer. Rent. The average asking rent for warehouse and industrial space is sitting around $14.43 per square foot triple net, according to Partners. That's basically flat compared to last quarter. CBRE actually note a slight dip in asking rents quarter over quarter. Depending on what type of space you need, warehouse and distribution is around $12.74, flex place closer to $18.92, and manufacturing at $11.79. So this means that those days of rent going up every quarter over quarter are not here for now. Tenants can push on free rent, tenant improvement allowances, and renewal terms. Landlords in strong locations can still hold prices, but the pressure is real. Supply and demand. Here is the key thing I want you to understand. Vacancy isn't rising because businesses are stopping needing warehouse space. No. It's rising because a huge wave of new construction hit the market all at once. CBRE report 360,000 square feet of new deliveries in Q1 alone, with another 6.1 million square feet still in the pipeline. Partners report even higher numbers at 1.9 million square feet and around 82% of vacancy. Meanwhile, leasing activity was actually strong. CBRE report 3.2 million square feet in leasing, the highest quarterly total since mid-2023. Partners report 2.5 million square feet, including major leases like Bear Manufacturing, City Systems, and USLPM. What this means for you? Well, the market isn't dead. Businesses are still signing leases. The issue is that supply is coming in faster than tenants are absorbing it. So for users, that is a window of great opportunity. For investors, this means that lease up timelines need to be underwritten a little bit more carefully. So is this a tenant's market or a landlord's market? Well, right now it is a tenant's market. Full stop. If you are a business owner leasing warehouse space, here is what I would do right now. First, don't rush. The leverage is on your side, so use it. If your lease is coming up in the next 12 to 18 months, start the conversations early. Not because you have to, but because you want to negotiate from a position of strength, no deadline pressure. Also push for concessions, ask for free rent period, higher TI allowance, and flexible renewal options. Landlords with vacant space are motivated, and that's your window. If you don't know how to negotiate all of this, my team and I can help you. Third, don't just chase the cheapest rent. Function matters. Highway access, clear heights, dock doors, proximity to the labor pool, those things determine whether your operation runs well. A cheaper rent in a poorly located building can cost you more in the long run. For investors, the opportunity isn't gone, it is just more discipline now. Focus on well-located assets where functional demand is strong. Underwrite realistic lease-up timelines and buy on basis. Overpaying for a speculative asset in a high vacancy submarket is a real risk right now. For landowners, if you're sitting on land along I-35 or near major corridors, your value is tied to access, to highways, to labor, and functional infrastructure. That's what is leasing. That's what is transacting. Now, let's talk about where you are looking, because the Austin Metro is not one single market. It's a collection of very different submarkets right now. According to Partners Real Estate, Georgetown and Southeast Austin are seeing the most stress, with vacancy rates of 28.4% and 28.2% respectively. A lot of the new construction I mentioned before is concentrated over there. That means if you are flexible on location, those areas offer real negotiating leverage today. On the other end of the spectrum, Bastrop County is running at just 3.7% vacancy. That's very tight. If you need a space out there, don't just expect the same concessions that you will find in Georgetown. The strongest leasing momentum right now is in the Southeast Austin and Round Rock, Haddle, Taylor corridor, which fits the bigger history of distributions and manufacturing demand along the I-35 supply chain. And for those of you in Kyle, Buda, or the southern I-35 areas, that corridor continues to attract logistics and distribution users because of its central position between Austin and San Antonio. Keep an eye of what comes out of ground there in the next 2 or 3 quarters. So here is the bottom line of Austin industrial market in Q1 2026. Vacancy, it is a historic high, not just because demand dried up, but because supply flooded in faster than market could absorb it. That creates a real opportunity for tenants, users, and buyers, and a more disciplined environment for investors and landlords. The smart move right now is to understand where your submarket sits, know your leverage, and negotiate accordingly. The window won't stay this wide forever. If you're thinking about leasing or buying a warehouse in Austin, I put together a free warehouse leasing checklist. It walks you through exactly what to look for, what to negotiate, and what most tenants miss. You can download it using the link below in the description or scan their QR code on the screen. And if you want real estate market updates like this one, make sure to hit subscribe and the notification bell. Every week I post educational content and market updates, so you know what is happening in the market before you have to make a decision. If you have a specific question about your space search, your lease, or a potential investment, email us at info@thecommercialdeal.com. We will get back to you, and we are very happy to help. Thank you. See you in the next one. Ciao, ciao.